Vincent, Bayer, the German pharmaceutical and chemicals group, big company, has made a €2 billion offer for Algeta, a Norwegian drug company. What's this all about?
It's essentially about bringing to fruition a collaboration that the two companies have been undertaking since 2009. This Norwegian company, Algeta, has discovered this drug called Xofigo, which is a prostate cancer treatment with potential, a lot of potential. And Bayer has been co-developing it since 2009. And they have revenue sharing, profit sharing agreements, etc., etc. Bayer wants full control of that now. So it's made a €2 billion offer, indicative offer. And Algeta has come out and said that they've done this, and it's kind of an invitation to offer a bit more, I suspect.
Right. I mean, presumably they know each other pretty well, and Bayer must have the sort of running here over any other bidders. What can we expect in terms of price?
Well, I think what we can expect is that Bayer will have to pay a bit more than €2 billion. At the moment, it is assuming peak sales for Xofigo of around about $1.7 to $2 billion in 2018-2020. That seems to be the sort of base assumption that Bayer is making, that markets are making about the potential of this drug. And getting control of all of the profits from this, of all of the revenue streams, of all of the royalties, etc., from this drug would be very valuable from a financial perspective for Bayer. So it needs to take all of that into account when making its sort of final offer. It's definitely going to have to be more than it offered already, which is 336 Norwegian kroner per share. We're talking maybe 350, 380, maybe even 400 kroner, but definitely more than it's offering now.
Right. We've seen a number of these sort of deals recently. I don't know if it's my impression, but I mean, there seems to be a bit of an uptick in big pharma buying smaller companies. Is there a reason for that? There
is. Partly it's to do with the patent cliff, although in Bayer's case that's not really an issue. The second reason would be that companies have discovered that their pipelines are fairly thin, and this I think is the part of the motivation for Bayer. The pipeline is thin, and what you see big pharma doing is focusing on individual drugs or companies that have one particular product that has been approved through the various stages, or some of the various stages that require approval globally for these drugs, and they're pouncing and buying them and paying, in many cases, hefty premiums for these single product companies because they bolster their portfolios.
Well, that suggests investors have quite a lot to look forward both in this case and in others. Thanks, Vincent.